The desire to buy a house has increased for many people. When looking to buy a home, you must consider various aspects and should not take action carelessly. Well, moving into the ideal home brings a sense of comfort and freedom from the limitations that come with renting. If you're ready to purchase a home, the first question you likely ask yourself is how much can I afford? To answer that question, you need to evaluate many factors. To give you a more precise picture of whether you can afford a home, you need to review your financial standing, taking the DTI ratio and mortgage rates into consideration. So, here are 5 tips to remember before signing a contract to purchase a home. The first tip is affordability. If you have enough money to buy a house using cash, you can afford to buy one now. Even if you cannot pay in full, most experts agree that you can finance the purchase provided you qualify for a mortgage on a new home. But how much mortgage can you afford? The Federal Housing Administration commonly uses the 43% debt-to-income ratio as a guideline for mortgage approval. This percentage evaluates if the borrower can make their monthly installments. Lenders may depend on the real estate markets and overall economic situations to decide whether to lend out the mortgage. It is difficult for most people, but it would be best for you to limit your entire mortgage amount to no more than 28% of your monthly gross income, including payments, property tax, and insurance. If you can do so, the monthly cost of purchasing a home will not become too much of a burden to your finances. With your DTI in mind, it also helps you determine how much of a down payment you will need to save for and the amount of loan you can afford. After the initial down payment, the bi-weekly or monthly installments may need some planning. The typical mortgage loan period is 15 years or more, and most decide to go with a 30-year loan with their first home because of the amount of money needed. With such a commitment, you should think carefully about how stable your source of income is. Although you may be pre-approved for a mortgage up to a specific amount, it does not mean you can afford the monthly payments. Depending on the type of loan you get, you might also need to factor in the possibility of cost increases. For example, the interest rate is a factor in establishing the size of a monthly mortgage payment and goes through years when they are high and years when they are low. For example, a 30-year mortgage on a $100,000 loan at 3% will cost you $422 monthly, increases to $537 at 5% interest, and 7% brings it up to $665. House prices and interest rates typically move in an opposite direction, so you might need to get a good balance between the two. The second tip is location. It is probably not new to you, but one of the most critical things when house hunting. The surrounding area is one of the most important factors to be considered when getting a new home. After all, it does not matter how nice a house looks inside if it is in an area that does not suit your needs. Whether you're looking for a family home or something more suited for your lifestyle as a young professional, location can make or break your experience with a new home. The key is choosing the area that best fits what you need out of living there. Public transportation, good schools, and recreational areas nearby? Is the neighborhood safe or well-maintained? These are just some of the questions you should ask yourself before deciding where to live. What one needs to know about any area can be obtained from various sources, including conversations with future neighbors, fact-based databases supplied by the government outlining the types of criminal behavior in the region, and advice from a real estate agent. Even if starting or expanding a family is not in your near-term plans, the location that falls in a higher grading school district will be beneficial from an investment point of view. Every parent would want their child to attend highly rated schools in an excellent school district. Study the public and private school systems in your target's neighborhood, focusing on test scores and other posted criteria that indicates the level of education and experience one can expect. Having a house in a great school district will be more likely to maintain its value, if not rise in value. The third tip is understanding maintenance and upkeep costs. Depending on the lifestyle you desire, there is various hidden costs in a new home. When purchasing one, it is critical to know that there will be additional expenses beyond the initial purchase price. Failing to consider the ongoing costs associated with maintaining your new home can quickly lead to financial problems in the future. You should research the past maintenance history of the property and ask about any upcoming repairs or upgrades that may need to get done once ownership transfers over to you. Also, getting some estimation on ongoing maintenance is essential. This could include lawn care services or painting services that could help maintain home value over time. Many new homeowners do not understand these costs until they get unexpected bills or surprises. Do not be like them and get yourself prepared. Maintenance and upkeep costs can vary from home to home depending on the age, size, and condition. However, these generally include regular expenses like taxes, insurance premiums, utility bills, lawn care services, and necessary repairs or upgrades. Additionally, there may be more costly surprises that come along with replacing a major appliance or having to repave a driveway. Remember to factor in all these additional expenses when shopping for a new property to avoid issues in the future. The fourth tip is to research all home types. Do not rush to get a random home just because you want to buy one. It is a life decision and you should choose thoughtfully. They all have perks and drawbacks, so research and decide on the perfect home for your needs. For example, single-family homes are ideal for those looking for a low-maintenance form of living that offers more privacy than other forms of housing like condos or townhouses. This type of home comes in all shapes, sizes, and styles. This home style features one to multiple stories, attached or detached garages, and outdoor living spaces such as decks or patios, depending on owner preference. On the other hand, there are some downsides to owning a single-family home. It is usually bigger than an apartment or condo that has more maintenance. Maintenance costs can add up quickly since homeowners are responsible for all repairs and upgrades required for their property. Also, it's often more difficult for homeowners in single-family homes to form strong community bonds with neighbors due to the lack of shared common spaces and facilities that typically come with a multi-unit community. Besides single-family homes, potential buyers have other options they may want to consider that may suit different lifestyle needs or financial situations. For instance, modular homes, townhouses, bungalows, multifamily, ranch homes, condos, and many kinds are all choices you can choose. Researching all kinds of home types before buying will help ensure that your new home is everything you need it to be. It is crucial to consider your budgets and needs when deciding what kind of house is right for you. The fifth tip is to investigate property taxes and insurance. Knowing what they cost should be top priority when house hunting. These costs can add up quickly, making your dream home somewhat of a nightmare if not taken into account from the beginning. First, property taxes are considered part of the ongoing expenses associated with home ownership. Rates differ greatly depending on where you live, so it is essential to research local tax rates before purchasing. The value of your home determines your tax bill, which can differ significantly from the purchase price. Be sure to inquire about potential exemptions that may reduce your annual tax bill. Then, looking into insurance is also a must. Insuring your new home offers you peace of mind and protects you from any financial responsibility if anything goes wrong on a property. Consider the type of policy that best fits your needs and budget, whether general liability or something more specific such as flood or earthquake coverage. Understand what the policy covers and how much you will be responsible for in an emergency. Lastly, remember to shop around since each insurance company may offer different discounts on your needs. In conclusion, getting your house hunting off the ground can use this list as a springboard. But keep in mind that purchasing a home is a very personal decision. Up to you to determine what is essential or negotiable based on your needs and budget. It is wise to research each aspect to make an informed decision. Besides, it can be beneficial to seek advice from friends, family members, and real estate professionals who know more about home purchasing. With that in mind, we come to the end of the video. Make sure to share any thoughts on today's video in the comment section below. Hit the like button on this video and subscribe to Path Your Planet for more content. See you next time.